A Fox Business alert: Greece averts an immediate default with a successful debt exchange. Here's what you need to know about this. The bond swap drew 83.5% participation. A CAC, collective action clause, will be imposed, which would essentially force some bondholders on board, bringing the total participation rate up to 96%. Was it a credit event? We're waiting for the International Swaps and Derivatives Association's decision. If it is deemed one, that would trigger the payment of credit default swaps, which essentially is insurance against a default. That would be paid out to bondholders. Now, all of this clears the way for a second bailout for the country, which may come as early as Monday. Joining me now from London, I've got David Quo, director at Motley Fool, and also back with me here in the studio, Jim Frischling, who's been following the story from the U.S. side of it as well. All right, I want to go to you, David, on all of this, in particular this issue of this ISDA decision. We're waiting on the decision. Your thoughts, are we going to get a quote-unquote credit event here?
Probably not, because as far as I'm concerned, what the creditors were forced to do was really to feel like a person being caught between a dog and a fire hydrant. Whichever way they turned, it wasn't going to be very pleasant for them. So many of them just simply said, we will take the haircut, but in this case it's more like a crew cut than a haircut. But as far as the credit default swaps are concerned, I don't think that will possibly kick in. But even if it does, Cheryl, it isn't a huge sum of money that's actually been involved. And as far as Greece is concerned, Greece has got a number of significant problems. The first one is that it has too much debt. The second one is that it has not enough cash. And the third one is that Greece is having trouble growing. I mean, when I look at Greece, it's almost like me looking at my next door neighbor and he's trying to grow things on his cabbage patch. But the problem is he's got too many weeds. So you take away the weeds, in other words, take away the debt. He hasn't got enough fertilizer, so you let him have some manure, and that's okay. But he's still a terrible grower. And so whatever he puts into the ground is going to die. So as far as Greece is concerned, some of those issues have been addressed, but it's still a terrible growing economy. It's not going to grow, so that a few years down the line, we're going to be having the same problem again.
Let me take this to Jim. This is a global markets problem. In particular, if he's saying if we don't get this decision in favor of the bondholders, you don't get that credit event, that is profits that don't go to them because of the credit default. So it's Christine Lagarde, head of the IMF. Here's what she said. She said, let's assume for a second the debt swap fails. The Europeans have to stop the contagion. We're talking about a small country of 12 million people, but it is what it means for the rest of the European continent that is the biggest problem. What do you say to that, Jim?
And I think that's right. I mean, this is not a win, in my opinion, for Greece, for many of the reasons your other guest just talked about. But it was the lesser of the two evils by far. And I think that's what the IMF, the ECB, the European Commission, and this forced debt restructuring, all of this was to basically say this is the lesser of the two evils. Greece has a mountain of debt. They have high unemployment. They're in a deep recession. Oh, and now they have to start initiating these really truly difficult austerity measures. They got to sell state-owned assets, and they got to find a way to, to essentially dig themselves out of this hole.
Right.
But this was the better alternative. So Christine Lagarde and the other leaders, I guess, of the community were basically saying we have to contain this. Will there be other challenges? The answer is absolutely. So I agree. We're not out of the woods yet, but this was the better of the alternatives by far.
David, especially if the Germans decide to close the checkbook, and I'm sure that there's a lot of impatient, well, not just politicians, but investors in Germany. Look, this is a 53.5% loss at face value for these bondholders. A lot of these bondholders, David, are actually the Greeks themselves, the average Greek that bought Greek bonds 4 years ago when it seemed like a safe investment. What does this do to them, this default?
Well, I think they have no choice because they're going to have to sort of take these new bonds anyway. I mean, these new bonds, first of all, are paying a lower rate of interest, and the term of the bond is actually being extended. But I think they have to address the real problem at the moment, which is that the Eurozone is in crisis at the moment. I mean, 6 out of the countries within Europe are in recession right now. And the ECB will be looking at this and they'll be saying, what exactly can we do? Now, they already know that inflation is going to be a problem because there is this oil problem. Oil prices are rising. So it means that they have inflation. So they cannot cut the interest rate any further in Europe. And they also have this other issue about whether or not they want to pump more money into the economy to help the Eurozone grow. They can't do that either, Cheryl, because that is going to actually fuel even more inflation, and the Germans aren't going to like that. So I think right now what they're going to simply do is to do absolutely nothing. And they will just hope that things will pass, there will be enough liquidity in the system that will allow the Eurozone to solve its problems over time. But I think at some point they're going to have to come back into the market again and say, yes, we're going to have to pump more money in here. We are going to have to cut interest rates. And that is when the Germans are going to say, I think enough is enough now.
Well, and they're going to say, they're going to call moral hazard, guys. They're going to call moral hazard on the fact that the Portugal market and the Spanish market are going to be clamoring for the same deal. And many analysts now out of Europe saying, David, they're just not going to get it. And that's where I think all of this kind of is to be determined. So I'm going to be calling you again. David Kuo, Motley Fool director. Just stand by your phone. Jim Frischling, we're going to get your picks in the U.S. markets coming up in just a few minutes. Okay, well, from the trade to the pick. And Jim Frischling's back with me on set. You like agricultural, but you're tying your pick on agriculture, on the sector, to oil and gas. Or, I'm sorry, to oil and gold.
Well,
Why?
Part of it is the price action of oil and gas suggests I think there are some real inflationary concerns there, which makes us then kind of look at the agri-based investing as something that's certainly interesting. You've got agri-commodities increasing in price. You've got land scarcity. You got population growth. And let's be honest, we have a global food problem in terms of food shortage. So you also have governments, by the way, they're going to be cutting expenses any way they can. They might cut on infrastructure. Companies might cut on capital, but people are not going to cut back on their food expenses. So, sorry.
Let's talk, no, I want to talk about some of the stocks
Sure.
that are in the group as well, because some are some interesting plays, but they're names that we know.
And we tried to look at a diverse way of playing this in the agri space. We looked at the equipment that essentially are required for this industry. We looked at Monsanto. We looked at Deere was first in terms of they're really just the best player in the market, their global presence. We looked at Monsanto on the bio side, and we looked at Potash on the fertilizer side. All three are dividend payers, some maybe a little smaller than others, but all pay dividends, all have good franchises. And again, farmers need to do more with less, which makes the fertilizer really interesting. Monsanto has great inroads into Latin America. So again, we tried to look at a different way of playing these, playing the agri investment, less about the specific, I guess, food and more about who gets this done.
Now, you mentioned Deere, but Deere's been getting hit a little bit. It's actually had some pressure on it. Part of that has been obviously global construction with Deere. Are you concerned about that in particular, the Chinese slowdown? Because that actually is one of their markets that they're really trying to push into.
I agree, but ultimately we think there's going to need to be more farms and more development, and when that happens, you're going to see Deere be the one that people look to.
Okay, back here at home, you and I were talking about home builders earlier.
Yes.
Home Depot, what do you say?
A little ways ago, we liked Home Depot and still do. I mean, just a tremendous performer in terms of its management team, its consistent returns. And again, in an environment where people are trying to do more with less, we continue to like the way people can go to that store, get what they need, make subtle improvements without spending too much money to improve ultimately their home. We talked about Williams-Sonoma, the same idea, but very different.
Well, you liked Home Depot, you still like it, but yes. Yeah, back in December we talked about Williams-Sonoma.
Yep, a little more high-end way, a little more specialty retailer, but with the consumer feeling better about things, and again, trying to, people nesting right now, the idea that they can go to this specialty retailer and, again, not too difficult or not too expensive, can ultimately make some improvements to their own decor.
We're looking at a 3-month chart really quick. It's down about 6%. I mean, I'm a little bit surprised, to be honest with you, because of the weather picture with retailers.
And again, I'm feeling good about the consumer right now. They spent 6% more money, I believe, year over year. So, well, I know some of that's going now to gas prices. The fact is, we do think that the consumer is feeling a little better about things, so we like the retail sector.
Jim Frischling, co-founder, president, NewOak Capital. Good to see you, Jim.
Nice to be here.